Yes, you read today's title correctly. Today, I will break down Trump's entire master plan so that you understand the complete background of what is currently happening in the market, especially in the traditional market. In today's video, it is very important to me that you understand the overarching macroeconomic picture so that you can comprehend the individual interconnections, allowing you to get a completely overarching view of the current market situation. We have some new relevant data that also suggests that a trend reversal might soon be upon us. I will specifically address numbers, data, and facts. As I said, I have prepared an incredible amount today. It is definitely worth staying tuned until the end of today's video because, in part, it goes very in-depth today. But that is important because you have to look at the overarching picture first, as the dependency between the traditional markets and the crypto market is still extremely strong. So we have some data in front of us, and that's why it's incredibly important to understand the macroeconomic connections. As I said, if you like such videos, feel free to leave a like and subscribe. I'm simply trying with these videos on the current market situation to counteract the fear a little bit, especially against all the emotional behavior. It's simply important to me to present rational analyses with multiple scenarios of what can currently happen. At the end of the day, it's always about probabilities. One can only rely on current analyses, forecasts, numbers, data, facts, and based on that calculate the individual probabilities or roughly determine what a realistic scenario is for the immediate coming days and weeks. Therefore, as I said, I will provide you with all the information and data throughout the video so that you can form your own opinion on it. It's not an ultimatum that I'm presenting here, but if you understand the connections yourself, you can also comprehend how I arrive at my forecast. Otherwise, as a brief overview, we see that the entire sell-off currently happening in the crypto market is also occurring in the traditional market. And the crypto market is, whether one likes it or not, linked to the traditional market. Here, we also see the dependency of Bitcoin on the S&P 500, and that's why it's important to consider when the bottom will be found in the traditional market as well. We see here the US 500, the S&P 500, with a total of 8% since the last high. And we have also seen here that everything has been dismantled again since this Trump rally. We see here, so to speak, the fifth North is always the starting point, essentially at the start of the Trump rally, which has now been completely dismantled again. We are even in the negative range here with the S&P, just like with the other indices. We see here the Nasdaq at 100, 11%, and here too we can see that the start of the Trump rally has been undershot at the current time. Also in this case, significantly below the level of the initial rally since November. Also Tesla, for example, 51%. So I can say to reassure you as crypto investors, the traditional market is currently experiencing the same. Individual stocks are also being hit extremely hard. And here we have returned to these fund levels from the Trump pump everywhere. Everything has been dismantled again, the entire upswing that we had seen. When you put the whole thing into perspective, we see Bitcoin at the current time, which, it must be clearly stated, is still standing very, very well at the current time. We are overall, if you measure it, since the Trump pump, that is, since the Trump pre-level, since the fifth, north and approximately still about 10% in profit. So you can actually see that Bitcoin and crypto in general have held up relatively well. So now, just referring to Bitcoin and not all the other altcoins, which is another topic in itself, but here we definitely see how the market currently values Bitcoin. If you take a look at gold, we see almost new all-time highs happening at the moment. Therefore, one can definitely assume that the market currently sees Bitcoin both as a risk-on asset, of course, because the correlation is present, also with traditional markets. But still, Bitcoin has a certain valuation as an investment, or rather, as a store of value similar to gold. And that's why we see a relatively stable chart here concerning Bitcoin. We have not yet returned to the previous levels from the fifth. North, we have not returned. So, primarily, this is a positive sign, which probably also has something to do with the fact that the news situation itself has been incredibly bullish in the last 2 months. Intrinsically crypto, so it's always very important to distinguish that. We have, so to speak, crypto intrinsically, meaning the entire crypto bubble itself, where we have seen very, very positive developments. We had all the regulations that have been removed. We had a Bitcoin strategic reserve, so quite a lot has really happened in the last 2 months. But as long as the overarching picture isn't right, as long as the macroeconomic factors don't cooperate, it's naturally very, very difficult for crypto to completely decouple, like in the case of gold. Unfortunately, we are not yet at that point with Bitcoin. It may happen sooner or later, or most likely, but as I said, we currently still have the correlation. Now, I would like to address the most important point, namely Trump's master plan and what is actually happening here at the moment. Why are we even seeing the sell-off? It is, of course, very important to understand the background behind this radical sell-off, why the market is currently in such strong fear. We also see a fear index of extreme fear, even with traditional values such as the S&P 500. So here too, investors are currently unsettled and frightened. And as mentioned, it is important to understand the core of the problem, which is currently heavily dependent on the general national debts that are present at the moment. You have to imagine the USA is currently extremely indebted, and all the refinancing logically has to take place over the course of the year. We see a total of $9.2 trillion in US national debt that needs to be repaid over the course of the year by the year 2025. So that is really a substantial amount. And logically, Donald Trump does not want to repay the whole amount at the current rate of 4.5. So the current interest rates are at 4.5%, and it would be incredibly expensive for Donald Trump to refinance a total of 9.2 trillion in national debt at the current financing rate, or at 4.5% interest. And that's why, logically, Donald Trump wants the interest rates, especially the current key interest rates, to be significantly reduced and lowered. That's also what we have seen. We have repeatedly heard from him that he wants lower key interest rates. We also see all the articles here. Trump may have found a way to force US Federal Reserve to lower interest rates. And it is exactly the master plan he is currently implementing. And it is precisely the reason why we are seeing these strong sell-offs, even in the traditional market. And now I would like to break down a bit at this point, what exactly is Donald Trump's plan? How does he intend to force the Fed to cut interest rates, specifically the key interest rates, which is naturally one of the main features for the Fed itself? So we need to elaborate a bit more here and understand what conditions must be met as prerequisites for the Fed to cut key interest rates at all. One of the most important driving factors is the current US inflation, where we have seen a clear upward trend since September, since October, which is absolutely not good for further interest rate cuts. This is simply because fresh liquidity entering the markets due to low interest rates would in turn reinforce inflation when the money supply is increased. Therefore, it is incredibly important that we can recognize a trend reversal here so that the inflation target of at least 2% set by the Fed is achieved, allowing more interest rate cuts to be priced in by the overall market. And the question, of course, is how Donald Trump manages to absolutely push inflation down. And it is exactly the behavior we have seen in the past few days and weeks with all the tariffs, essentially the US tariffs, that Trump has imposed on other countries. This will strengthen the USA in the long term, but in the short term, it causes unrest and general uncertainties. When there are uncertainties in the overall market, spending is generally reduced. When spending is reduced, we can see here that US inflation is plummeting dramatically, and this is exactly the scenario we are currently witnessing. This is exactly what Donald Trump wants, which is, in this case, trueflation, essentially a preliminary US inflation indicator that has been relatively accurate in the past. Therefore, to some extent, it can be relied upon. We have currently reached a value of 1.4, at times 1.3%, which pertains to the current US inflation. So this is really tremendous, and it is, of course, a strong means for Donald Trump to force the Fed to cut interest rates because, so to speak, this track value is given, okay, the inflation or the general inflation problem is solved, which is essentially a green checkmark for the Fed. When this condition is met, it becomes significantly easier for the Fed, or the Fed then has significantly more leeway to announce interest rate cuts. So, in any case, the current scenario is that it really gets a complete overhaul here, and this is currently the ultimate master plan. In any case, this will play out very, very positively in the long term. Then we have a similar scenario as back then when we saw the COVID crash, where we even had a negative value, meaning there was even a short-term deflation that took place. And then we also saw this incredible stimulus, these massive financial injections that came into the markets, which logically drove inflation back up. That's why we haven't really seen large financial injections since 2022. And I would say this is a scenario, a story that can repeat itself now. This is exactly what Donald Trump wants. So I definitely think that now you have understood the overall context that Donald Trump intentionally wants to push the markets down. Donald Trump is probably happy right now that all the markets are crashing so that the Fed is forced to price in interest rate cuts again, because I can tell you one thing, the Fed will never significantly stop QT or initiate new interest rate cuts at a new all-time high of the traditional markets, simply because it doesn't make much sense to price in significant interest rate cuts during such phases. But as soon as the overall economy starts to falter again, or rather, there is general uncertainty again and you simply want to stabilize the economy here, then the Fed is more willing to announce further interest rate cuts. And that is exactly the scenario, as I said, that Donald Trump currently wants. The big question of all questions is, of course, when will the bottom come? When can we expect a turnaround? I can tell you one thing. The big problem is that this whole master plan has to be executed first, and all this data has to be priced in first. You have to imagine the current inflation indicator is, as mentioned, only a preliminary one, but it will take some time before any inflation data actually comes in. We see here on March 12th, definitely mark it in your calendar. It will be an extremely important date for the overall economy, for the overall markets, simply because the next inflation data, the next CPI data will be released then. We see a current forecast of 2.9%, and I can even well imagine that we might come down to 2.8%, simply because, as mentioned, due to the current tariffs in place, we have seen this drop in inflation, and this could initially be priced in here as well. It's important to understand that all these pricings happen retrospectively. We are only now getting inflation data from February, and then we have to wait another month for March. So you can definitely see that all the macroeconomic factors need a certain amount of time to play out before everything is priced into the market. This doesn't happen overnight. The market first needs to fall into uncertainty and fear so that a trend reversal can occur. So it's very important to understand this, and especially in traditional markets, it might take a bit longer. It could also be that there's still some room to go down, as logically Bitcoin might also be pushed down, but generally speaking, in my opinion, the majority of it has been overcome. So now we're transitioning a bit to what currently specifically affects the crypto market. As I mentioned, there's still an extreme fear present, and I want to address a few points on how the current crypto cycle might behave over the course of the year. So I'm deliberately removing this ghost bar here, which was just drawn in from the last video. So I also assumed that this crypto summit would simply become a sell the news event. So feel free to check out the last YouTube video. Especially those of you who watched the last video were actually prepared for the current sell-off, knowing that there would be another sell the news event. Now, of course, the big question is, where will Bitcoin find its bottom? Yes, what is, let's say, realistic? In my opinion, as I said, the majority is over, but it is certainly possible that we might touch this interim high again, finding support here once more. This would also perfectly coincide with the EMA, which has historically been considered an important support, indicating whether the bull run is still intact. In the last cycle, we also saw this sell-off here, especially this interim sell-off that we saw in the last cycle, where a double top was formed, and we also found support here at the EMA. Then we have here the EMA, or rather, in this case, the SMA, which we broke through with a small confirmation, and then the bear market was officially initiated from that point. As soon as this moving average was surpassed again, the bull market was officially intact, and we found support here once, even more support here, and then we even got a spike here during the yen carry trade crash at the end of August 2024, which we have seen. And something like that could certainly happen again, that we come back to the US dollar, that we get a candle wick here so that a sustainable trend reversal can really be initiated. And in this regard, several factors currently speak for themselves. The main factor, in my opinion, is the global liquidity, which is currently being significantly expanded. We have always seen a time lag of exactly 2.5 months, so the global liquidity, that is, the M money supply, was always a precursor to how Bitcoin would behave. And we have seen quite clearly, always in white, we first have the expansion of global liquidity, and then, as a result, about 75 days later, Bitcoin also rises. And what can be relatively well recognized here is that we had formed this small bottom at the end of January, meaning a trend reversal in global liquidity, and thus one could roughly assume that from the 25th of March 2025. So generally speaking, at the end of March, beginning of April, we can assume that this liquidity will also reach Bitcoin, and thus Bitcoin will follow suit again. As mentioned, this correlation between global M, meaning the M money supply, and Bitcoin itself has been noticeable very, very often, and here we have this scenario as well. I have prepared this for you using various graphs, so you can really see, okay, hey, at the end of March, beginning of April, one can quite reasonably assume, based on the data we have in front of us, that a trend reversal is taking place, because we are currently seeing a strong spike here. So, this is not just minimal, we are really seeing a strong surge in global liquidity. One might naturally ask why we currently have this expansion in global liquidity, with one of the main important factors being the current US dollar index, which has significantly dropped in the past few days and weeks. And generally, the rule is that as soon as we see a weak US dollar, it is very, very good for risk-on assets, such as crypto itself. And we can also see here that we are slowly but surely returning to the green zone, where risk-on assets benefit more and more strongly. And I personally view this as very positive that we currently have several building blocks coming together in the background, such as the global money supply, the current collapsing inflation, and generally the demands or Trump's master plan. So we definitely see very clearly the individual parameters that lead into each other, which now give us an overall picture of what we can roughly expect for 2025. And that's why I am personally of the clear opinion that this cycle is not over. So, in my view, it is very unrealistic that we are now entering a 4-year bear market, given the current factors we have. And as mentioned, we also see this strong downturn that has occurred in this case. We saw the peak in mid-January, and just last week, at the beginning of March, we saw a significant impact, and as mentioned, it is very, very positive for cryptocurrencies in general. To rely on historical data here as well, I have prepared a small graphic. Every time we have seen this downturn of the US dollar, where a weakness was shown again, where generally a collapse occurred, we have seen this relatively often, and we can definitely rely on historical data for that, and we also have some reference values regarding Bitcoin. Once here in 2025, where we saw a collapse in the US dollar index, it was also bottom territory in that case. Also in 2020, a bottom territory. We also saw the ultimate bear market bottom, and in 2022, we saw the bottom here as well. So you can definitely see clearly, and this signal has now flared up again for the first time. So this strong collapse of the US dollar, which we are seeing at the current time, has given us a signal again, which in my opinion clearly indicates that we are very, very close to the bottom territory. This all makes sense, of course, as we currently have extreme fear in the market. So you can definitely see that all the building blocks make sense together, ensuring that you have a clear overarching picture in that regard. Of course, as I said, it should be clearly stated again that it is quite possible we might experience sell-offs, that Bitcoin might correct back a bit, and that altcoins might also correct back. I know you might not want to hear it, but at the end of the day, I want to present rational analyses here, and it is quite possible that there is still some room to move downwards. However, in my opinion, it makes absolutely no sense at this point to leave the market, sell, or anything like that. In my opinion, it is currently becoming very exciting for me personally to actually start buying Bitcoin again. As you know, on my YouTube channel, I am more of an altcoin fan, and personally, I am still mostly invested in altcoin positions. However, if you want to engage in DCA, dollar cost averaging right now, I think it's a good time to put some into Bitcoin, some into Ethereum, and into Solana. So, just investing in these three players is, in my opinion, sensible at the current time. Especially if you hold the thesis that the bull run is not over yet. At the end of the day, each of you out there has to make the decision for yourselves. Of course, there are also some people out there whom I've seen on Twitter who are now claiming that the bear market is beginning. Now we have a bear market for the next 4 years. That's certainly an opinion one can hold. At the end of the day, each of you has to know for yourselves. In my opinion, there is relatively little to suggest that a bear market is being initiated now. In my view, everything is still fundamentally intact. One just needs to be patient at the moment, and this current Trump master plan needs to play out. The markets need to suffer first, so that Jerome Powell is then forced to cut all the interest rates, which could then bring fresh liquidity into the markets. What one can certainly speculate on is quantitative tightening, that this sell-off of assets by the Federal Reserve finally ends, that essentially a pivot occurs from QT towards QE, or at least a halt of QT. So as mentioned, this is the dependency of Ethereum on Bitcoin, and every time we have seen a pivot here, meaning when QT ended, quantitative tightening, we also saw the bottom in the dependency of Ethereum on Bitcoin. So at the latest, I expect that Ethereum will also start its rally again. And as we all know, Ethereum is the big catalyst for our altcoins. So this is very, very, very important to understand, and that's why one must be patient for now, but it might also happen sooner than one thinks. In my opinion, it is realistic, either in the next FOMC meeting or in the following ones. So during the summer, it was actually already confirmed, so that you are aware this is not just a forecast or an opinion of mine, but it was officially confirmed by the Fed that during the summer of 2025, QT will end, and at the latest then, when we essentially relieve the pressure from the selling off of assets, at the latest then, in my view, the official trend reversal will occur. We definitely have to be patient until then. That is, I would say, the current state of affairs. Feel free to write in the comments what you think of today's video or how you assess the current market situation. Are you buying more at the current time? Are you extremely frustrated? Probably so. We all feel the same. We're all in the same boat. So believe me, for me personally, this whole situation is anything but pleasant at the moment, but these are exactly the phases you have to endure if you want to be successful in the crypto market, because as I said, these are exactly the phases where 90–95% of investors are washed out. You can also see it based on some on-chain data, how many private investors, how many retailers are currently being systematically flushed out. It is essentially a systematic redistribution of wealth from the poor to the rich, or from the inexperienced to the experienced, depending on how you want to look at it. That's why it's personally important to me to keep you updated with my rational analyses. As I said, if you liked it, feel free to leave a like and subscribe, share your opinion in the comments, and then I would say we'll see each other again in the next video.